What is up? What is up, Zinger Nation? We are here on another episode of After Hours with Ryan Rozbiani. Ryan, we've got a lot of earnings to talk about today.
Oh yeah, man. How you doing, producer AB? Hello, everyone who's watching live. What an earnings day we had. It was fantastic. I'm excited. How do you feel about it?
Well, it's good. It's good to see these earnings. It's good to see these like big companies smash earnings because that usually means good things for the market coming ahead. I was just kind of complaining to Spencer earlier a few minutes ago on the stream that I'd bought in some kind of YOLO Facebook calls the other day that were like 310 strikes, and I sold them today before their big earnings.
No.
Yeah, and like the whole reason I bought them was to play the earnings, but then they ended up going up, and there was some stuff that kind of scared me out of them, but I was just being a wussy, and I sold them. And on the bright spot, I did have a couple like $135 Apple calls that I'm hoping I'll be able to sell tomorrow for a little bit. But you never know with some of these, because sometimes the earnings they'll go way up, and then as the call goes longer, they'll give some bad guidance or something.
Yeah, if they say something bad, everything comes down. Plus, you also have the thing of earnings can be fantastic, and you still have a sell-off. So that happened to Apple last quarter. They had fantastic earnings, but you still had like a massive sell-off. I think this time the big reason we're having to jump, and we'll go into super details with everything with the Apple earnings, is it's because that everyone was expecting them to do bad. I was expecting them to do really bad with the chip shortage, with everything going on around the world. I was expecting them to have really bad earnings because Q4 earnings are usually fueled by the holidays stuff, the Christmas, the Hanukkah sales, everything that comes into it. New Year sales, people get new year, new phone, all this crap. So I thought that Q1 was going to be terrible because everyone's coming off that. Traditionally in January, people have a lot of debt. They don't do much spending, but the complete opposite happened. I think we should jump into it. We ready to jump into it?
Yeah, let's do it.
All right, let's dive into it. So usually we always start off with the charts, but we got to start off with this news panel. Again, if you've been following me on Twitter, I've been using the Benzinga Pro tool to kind of pump it out. I was having so much fun the other day on Twitter. I was like, I love Benzinga Pro. And I was just having a lot of fun with it. So let's get started here. So let me just see if I can zoom in a little bit so you folks can see this a little bit better. All right, cool. Actually, I can go to the news thing and it can get perfect. There we go. All right, so let's get started. So Q2 earning EPS beats 140, beats the estimated 99 cents, which is a big beat. Sales beat about 89.58 bill, beated the 77.35 estimate, which is fantastic. It's always good to have beats there. That's great. So then the big thing for Apple is they also give you their device earnings and sales. Tyler, we will talk about 4.2 in a second, I promise. Apple's Q2 earnings, also during their earnings, they break down the sales of their devices, which is something that's unique to Apple because, for example, Facebook doesn't do that, like tell us how Instagram did and all that, but Apple does that. So, for example, iPhone sales year over year jumped almost like a double, like not as exactly double, but almost double to 47.938 bill versus last year's sales, which were 28.95 bill, which is a big jump in my opinion. Great, especially during a pandemic. I guess people were getting the COVID relief checks and they were going out and buying new phones, which makes sense. Sometimes you gotta get a new phone, need new tech. People were working from home, so they needed better tech. That makes sense. Apple adds a $90 billion to buyback. I guess they're buying back shares. Dividends went up, which is great. Dividends went from 0.205 to 0.22 per share, which is fantastic. A company raising dividends with everything going on now is huge. A lot of companies cut their dividends. Boeing cut their dividends. Delta cut their dividends last year. Apple still maintaining their dividends and increasing it is fantastic news in my opinion. I'm so happy to see that. Mac sales also went up, which was expected in my opinion. I expected Mac sales to go up year over year just because of the work from home and all that stuff. So that was a big jump, and that was expected, and I'm happy with that. This is what's interesting. I've never seen this before in the past. They gave us their sales for each sector around the world. US sales, Europe sales, China sales, Japan sales, and the rest of Asia. Of course, China dominated US dominated. Fantastic. I love it when we win. US dominated, followed by Europe, then Greater China, then Japan, then the rest of Asia Pacific. iPad sales were also up, which is cool because those who don't buy the MacBook could go out and buy the iPad because, of course, some people just don't need a full iPad. Some people could just do their whole job with an iPad over a MacBook, which is fantastic. Service sales, which is interesting. This is, I guess, goes into The revenue streams of subscriptions and all that stuff went up as well. Not too much up, but that's expected because once you have people locked into that, either they leave, and unless you have new people coming to the platform, it's very hard to convert sales and bring new people to your service sales and all that stuff, which is fine. Paid subscriptions are up to 660 million from 620 from Q1. Fantastic. Wearables, a slight increase, but again, wearables, especially it's been a year that a lot of people have been home. You don't really expect the wearables to go up, and they really only have one wearable. I don't know if the AirPods count as a wearable. You got two wearables essential, but count AirPods. So I don't see many people wearing Apple Watches at home. You can actually have your phone with you at all times, and that's a Samsung, not an Apple. So don't sue me, Apple. So
I've got mine on at home, Ryan.
Oh, you do? Well, producer AB, you're working, man. You got a high-tech job. You got to keep up with
True.
Jason's text messages and all that, all of my calls and stuff. So you need that. But like the average Joe Schmo doesn't really need it. I mean, people do wear it at home. I have seen it. That's true.
Well, I'll be honest. I got the Apple Watch, and this is like an older model, so I think it's only like the $200 one or something. But I got this as a gift, and it's one of those things that I love having, but I probably wouldn't have gone out and bought myself.
Yeah, that's the thing about the Apple Watch. I still cannot wrap my head around the functionality of it, unless you're someone who's in board meetings all the time and you can't answer your phone or you can't check your notifications. You need a slight check real quick in case of emergencies. Beyond that, I've never seen a real use for it aside from maybe sports and athletics. But to be honest, I've seen the whole Fitbit, which I think Nike runs Fitbit now, but I'm not 100% sure. Fitbit has a lot more functionality from what I've seen in terms of what they can do and all that. But Apple's catching up with their new sensor, so that's fantastic. I do want to see this number go up eventually. This is where a lot of potential lies for Apple to develop that AR technology, that VR technology. So that's where a lot of it goes through, and a lot of it can shine here is where they have the biggest potential to increase sales and kind of convert people into the wearables market, which is what they want to do. You've seen them release Apple Watches for kids that don't need cellular data and all that stuff. So that's going to be really, really, really interesting to see.
I think Google might have bought Fitbit. Fitbit used to be a publicly traded company, but I don't think it's on the exchange anymore.
Let's see who owns them. I'm very interested to see this Fitbit.
It might be Nike, but I thought
it's Google. You were right. It's Google. For some reason, I thought it was Nike. Nike should have bought them. That was a dumb move on Nike. Nike should have bid as high as they could to get it. It would have been a perfect integration.
Yeah, I agree with MP in the comments saying they're great. I think she's talking about Apple Watches. I didn't. One of those things I wouldn't go out and buy myself, but now that I have one, it's like I end up using it a lot more than I thought I would. And well, one thing too is I always hated about like the early model Apple Watches is that you had to have your phone like right next to you because they were connected Bluetooth. But I went out, and since I got this as a gift, I went out and got the $10 a month like cellular service on it.
Mm-hmm.
So, it is a little bit annoying that now my phone bill is like $10 more, but at the end of the day, it's $120 out of the year, and I didn't pay for the watch. So
and you could write that off, by the way.
Well, yeah,
because
I don't know how to do all the I don't know how to do all that taxes stuff. I might need you to help me with that, Ryan. But now that I have the cellular on it, I'll like leave my home or my phone at home while I go like run an errand or something, and if someone calls me, I can take the call on my watch. And that's really fun because it makes me feel like a secret agent, like talking into my watch.
Yeah. Do you have to talk into the watch, or can you like be connected to AirPods?
I honestly, you'd probably be connected to AirPods, but I assume you could be like this far away and it'd be fine. But I get like right up into it because
it's all the stuff. It's like you're a Power Ranger from back in the day.
Yeah, exactly. It's fun, and it's honestly really nice to be able to like leave my phone at home, but still like if someone really needed to call me, they can get a hold of me.
That's true. All right, so we covered the earnings for Apple. Let's jump into the chart. Let's make some predictions for where the chart is going, where we're headed for the next few days. Let's go big here for a sec. Actually, I don't want to do that right now. All these little banners are making my chart smaller, but that's okay. So let's go into the daily chart. Oh, I'm zoomed in. That's why it's doing this. Hold on. Let me reset my zoom. There we go. That makes more sense. All right, so let's zoom into what Apple's been doing. So essentially, the big jump that we're seeing in Apple today, especially after hours, it's calming down a bit, which is expected. is because Apple, again, just like all the other tech companies, suffered from the sell-off that happened through essentially from January downward. They got hyped up over the Apple car sales, which we've discussed on this channel all the time, and it started to decline, and it declined even harder again, where we saw like the bottom of the market around March 5th to March 8th, and then it started to slowly incline back up, and it was sort of stuck. If we kind of zoom in here, it was stuck inside this box area essentially since I want to say April 9th until now. It's been stuck in this little box area here because people were worried about earnings, and just rightfully so. Last earnings, Apple sold off. I know a lot of people who had limit orders ready to go expecting Apple to sell off today, jump in and quote unquote buy the dip, but Apple went up, which is fantastic and interesting to see. So in my opinion, I think we can easily make our way back now to the 140, 145 area into the next coming weeks to months. I don't see any reason as to why this wouldn't be in a straight upward trajectory. You're going to get that red after they do their dividend payment, and you're going to do a lot that goes into it there about your dividend payment. Someone's saying, go to my LinkedIn. You can see all my information on LinkedIn. You just go straight to my LinkedIn and you can see all my infos there. I'm extremely transparent about everything. If you actually check the trajectory here of when they pay their dividends, we'll see a small dip into their chart, which is fine. All companies do this. They take a little hit when they pay out dividends, and then after that, they'll be able to go right back up and make the trajectory back to 140, 145, and kind of run up into their next earnings, which I think the guidance is good. Apple shares are trading higher after the company did better than earnings for Q2 EPS and sales results. So I guess this 90 billion buyback is also big. I'm just really waiting for more guidance, which we'll probably get. It's probably during the call now, so we'll probably discuss it on another day during the after hours. So this is going to be interesting. It's going to be exciting. I'm looking forward to what's going on here. And let's take a look. Anything else coming in? Stellar performance. Let's see if there's anything. Their gross margins also went up, which is great. Gross margins came in at 42.5, up from 39.8 in the previous quarter, which is fantastic. Operating cash flow was at 24 billion. That's fantastic. All right, so let's go to Ford. I promised Tyler will go to Ford, and then we will go to the Big Kahuna Facebook. We're going to cover everyone. So Ford's a company that's interesting. Ford is trying to get into that EV space, just like you got CCIV trying to get in there. You got Fisker trying to get in there. We got Tesla already in there. We've seen Toyota that's been talking a lot about jumping into this space and kind of saying, hey, we want to get into EV. We saw them make massive moves this past week, essentially. They came in and they bought a deal from Lyft for their self-driving, about $550 million. And in Indiana, they're building an $805 million plant. I want to double check that number real quick with you folks. I tweeted it. By the way, if you want to follow me on Twitter, it's at Ryan Rozbiani. You can go to ryanstocks.com. All of the links to my stuff are there. We got a lot of stuff coming out there. I just want to find this thing because this is big. I was expecting Toyota to sleep on the sidelines for the next coming months with everything going on, but Toyota spends $803 million to retool the factory in Indiana to produce 2 new electric vehicle SUVs, which we've seen and discussed a lot about. So Toyota, I think, is going to finally get in here and be a big player. We know what the big players in EV are right now. They're Tesla. GM is building its way to be there. CCIV is building its way to be there. And then we're going to, of course, Volkswagen is trying to get there as well. And you've got Ford, which is the 5th one. And Toyota is sneaking its way in there. I think Toyota will come in and eat a lot of market share for Ford. There's been a lot of people who are covering Ford, and it's been weird. So let's talk about the earnings. Let's do a complete unbiased look at the earnings. EPS for Q1, 0.89 cents, beat the 21 cent estimate, which is fantastic. Almost a 4x, over 4x beat. That's great. Sales beat also by $4 billion, which is great. It's funny how we're talking about billions of dollars here, and we're like, oh, they beat by $4 billion. It's like we always expect them to come in higher and higher. That's a car company. How often do people buy cars? But again, that being said, Ford CFO Lawler says semiconductor availability will get worse before it gets better. Okay, so this is why we're seeing the dip. This is exactly here. And this is good. This is transparency. You don't want the CFO to come out and say, oh, everything's going to be fine. We're all going to be chilling. Everything's going to be great. Ford's just going to be producing. Then in 2-3 weeks, if they have to shut down production for 5-6 days like NIO did, the stock will tank, and you'll see short sellers come in and kind of use this vulnerability to short Ford. So I think it's good. It's good to make yourself a little bit vulnerable with transparency and bring the truth forward, because that way it allows you to see everything in real time, which is completely fine. Ford says it expects 100% of passenger vehicles to be all electric and 2/3 of commercial vehicles to be all electric plug-in hybrids by 2030. Okay, everyone says that. That's a blanket statement, which is very hard to get to, but I guess they'll get there. Let's take a look at the chart. There isn't too much data here from the earnings, but let's take a look at it. Let's see what's going on. So, okay, so Ford's been in a positive trajectory essentially since last September. It's been in a positive trajectory with big jumps that happened here. Let me see, January, it had a fantastic move in January, and it wasn't really affected by the redness of March at all. If you look here, it was just riding the 21 moving average, which is fantastic. It's had a massive move. It's had a massive move from $6 a share to 12. So it's essentially had a 100% run, and now it's dipped in the past few days. I guess people were expecting earnings to come not so great, but they still beat earnings technically. It's just their forward guidance is lower, which is why you're seeing a drop of 2.98%, which isn't a big deal. In my opinion, a 3% drop in a stock that's around 100% is not a big deal. You have to look into the past and future forward. This is an opportunity here for those that want to get into Ford long term. In my opinion, again, I'm not a financial advisor. This is all for education and entertainment purposes only. Any risk you take are your own. But personally, if I was someone who's looking to get into Ford, which I'm not at the moment, this is probably a good opportunity to get into Ford. A 3% drop is not a big deal, in my opinion, for a stock like this that's run 100% in just such a short amount of time. Taking a look at it here. Let me get a better view. All right, so it's curling up. So the MACD is still positive. RSI is sort of curling down, so you might reject that reversal and come back down and maybe test your low 11s. So it's not a big deal. So I want to see. Tyler said he sold my options he's not my options. He's saying his options. Sold my options this morning. Took a profit from 11.5, which was less than a month left. Okay, that's fine. You took profit. That's fantastic. You probably did a really, really good thing. And he's asking, will Ford bounce back? I feel like it's going to be a slow rise back up. Well, so how far back up do you mean? So for example, their high is like 13, almost $13, just a penny short of 13.62. Let's just say 13, right? They're only off by $1. I mean, the float is in the billions, so it's going to take a little bit of volume to move it. But I still think there's a lot of believers in Ford, a lot of people that are investing in the US EV market. You still have the infrastructure bill, which we'll learn about tonight from President Joe Biden's coverage at 8 p.m. He'll be doing a speech talking about the infrastructure bill. So if EV incentives are good, if that rumored $10,000 tax return is true in terms of buying an EV car, this is fantastic for Ford because it's one of the few EV companies that actually has a fully EV or EV cars on the market. It's Tesla. I think Kia has one. I know obviously Tesla, Kia, Ford. There's very few options that are out there. So I think Ford could benefit handsomely from this if we get really good news tonight in regards to EV vehicles. So I don't see why there'd be any issues or any worry about this one, in my personal opinion. By the way, if you folks are watching the stream right now, if you could do me a solid, do me a favor and smash the like button and subscribe. We have a lot of great content on this channel, on this network. It's getting better by the day. They're rebuilding, they're restructuring. Everything's getting fantastic. So if you could do me a solid and just smash the like button, I'd really, really appreciate it. All right, so let's go to the next big kahuna, Facebook. Facebook is a company that a lot of people forget. It's like a Goliath of different companies. Let me show you something. Facebook investor relations. This is what a lot of people forget. People just think of Facebook as, oh, Facebook, the old website where I can see my friends from high school. It's not that anymore. Facebook is this Goliath now. If we just take a look at all the companies that are built into Facebook, let's go to what we build. Here you go. So you have Facebook itself. You've got Messenger, which is widely used. I still use Messenger to talk to all my friends. Instagram is out there, which we know it's the biggest advertisement company in the world. It's a massive Goliath, destroys numbers. WhatsApp, which is fantastic for communications both domestically and internationally. Oculus, I'll come back to that in a second. Workplace, Portal, and Novi. Portal and Oculus kind of go together. Novi, I'm not too familiar with what that is. Let's see what Novi is. Novi Connect. Okay, so this is them at putting their foot into the fintech area. I don't know how successful they will be with that. I think they're doing too much if they're trying to do fintech now, but that's okay. That's their business. Portal, it revolves around kind of this VR, not VR really, but more of like communications. It's their alternative to Zoom and all that. It's cool, but again, I think Zoom is just so much more mainstream, and Portal's marketing hasn't been fantastic. So I think we can completely forget about that. Workplace, let's take a look at what Workplace is for those that are. It's a community based. Okay, Facebook groups. It's Facebook again. So it's really just these five right here. Oculus is where their bread and butter is. Oculus is where we've discussed on this channel many, many times is Oculus is VR. They bought Oculus. They bought it for cheap, in my opinion. They've been developing it for cheap. And I think that Oculus is what's going to take Facebook to the next level into being this company that can get to $1 trillion market cap, in my opinion, when they launch their AR equipment and AR glasses that will replace your phone. Again, going back to what we were talking about with Apple and wearables, Facebook might dominate the mobile market one day. Apple takes their time with these things. Apple drags their feet these days. Back in the days of Steve Jobs, things would happen much quicker, but nowadays it's not as quick anymore. Innovation is not as quick, but VR and AR has been fantastic for Facebook, and they teased it for us. So I think that's where Facebook can dominate in the wearable space, and I think that's their goal, is to eventually completely remove cell phones from our pockets and have these glasses, like producer AB was saying with the Apple Watch. He just gets the $10 a month mobile plan, and everything just kind of flows and it's kind of in sync, and you no longer need the phone. You see everything in your glasses. Of course, that will take some time, the S curve and all those economical terms. So it'll take some time, but I think we will definitely be able to get there. So let's go to their actual earnings. Facebook is doing fantastic after hours. Producer AB and I were talking about this back when it was under $300. I was saying, hey folks, I love this long term. I was scooping up shares under 300. Under 300, I was just eating up free shares because in my opinion, it was free money, and now it's paying off. So let's take a look here. So you got massive call sweeps coming in, which whoever's buying these call options just had fun. So once you see this kind of pop up in the Benzinga Pro ticker, that means you know earnings were good, because this comes in a little bit earlier than it came in, like a minute earlier. So Facebook's estimated price share beat at $3.30, estimated $2.37. Fantastic. Sales were 26.17 billion. Estimates were 23.67 billion. Beat again. To me, it's just comical how we're talking about in billions of dollars for such a massive company, but I'm still really, really blown away. Facebook raises low end of year FY21 guidance. So they're raising their guidance from 68 to 73 billion to 70 to 73 billion. And they cut their CapEx from 21 to 23 billion to 19 to 21 billion, which is good. They're reducing costs. They're increasing guidance. They think that they're going to do better. Facebook is going to kill it. Again, remember, Facebook is not just the social media platform. It is everything that we were just discussing here. All of these different things that they're going on. I wish they would cut Novi, Portal, and Workplace. These, in my opinion, are worthless for the way that they're executing it right now. Maybe later down the line, they'll be able to use it for other stuff, but I think right now they're wasting time on that. Earnings beat, Facebook jumps. All right, so let's go into the chart. So again, we were right. We talked about it on this channel. If you got in with us on this channel, again, not investment advice. For those who got in, congratulations. Let's use one of my favorite tools. Let's run a Fibonacci extension on this one to see how fantastic it did. Where are you? Hold on. I'm still getting used to TradeView. I'm more used to playing with Webull. But again, that's just me and my growing pains, and we'll all learn together. Up, down, and let me take you here. So it's doing well. It did well. It beat everything. Excuse me on that one. Let's run a little bit more accurate of a retracement. It's a little bit closer to where we are now. Let's run it again. Down, up, down. Okay, take me back to the moving tool. I'm gonna maximize this here so we can get it. So yeah, it destroyed. It destroyed. It completely destroyed. This is a massive move for a stock this big. It's a humongous move, and I think that it's also wild that people aren't taking profits at this level. I guess they were expecting this, and they're hodling. When you increase guidance that way and you decrease capex, that's a huge sign of confidence for a company into the next moving quarters, especially as we saw this massive tech sell-off that occurred a few weeks ago was really due to people fearing that, hey, are these valuations too high? Are these estimates too high? Are they just pulling our leg here? What's going on? And Facebook delivered. Apple delivered, Qualcomm delivered. We'll go into them next. But I think this is fantastic. By the way, if you have any questions about Facebook's earnings or Apple's earnings, this is a really good time to put them into the chat now, and I'll try to answer them as best as I can. Tyler, thank you so much. Tyler says, always love the streams, keeps us up to date a lot. My pleasure, man. Producer AB and I are having fun, and thank you to Benzinga for allowing us to do these streams. We're having a lot of fun with you guys. And do me a favor, folks, if you're watching, smash the like button. We're having a lot of fun. And if you want to follow me on Twitter, it's at Ryan Rozbiani. You can also go to ryanstocks.com. I'll put the link into the chat. I'll put the link to the chat for you folks, so you can actually come and give me a give me a follow and we can talk to each other on Twitter, answer any questions you might not want to ask publicly here. You can hit me up there and I'll be more than happy to answer them. So let's go into Qualcomm. Qualcomm is a company that I was expecting to have terrible earnings. It's a company that I own shares in. Again, it's not, again, Ford, I don't own shares, and I try to be as transparent as possible into this. So Sam is telling me, Sam says news on Apple sell off in the after hours. Let's take a look at Apple real quick before we go into Qualcomm. Is there a sell off happening? I don't know, man. Sam, we're up 1.75% in after hours. We're doing good. Not sure what chart you're looking at, buddy, but let me go to the 1 minute chart. Maybe there's something that I'm not seeing. Are you talking about this? This is fine. This is nothing. This is like, if you look at it, it's almost nothing. After a big jump like this, I guess it's sort of stabilizing, but again, we're still up in the after hours. That's cooling off a bit from that big hype. But I'm not worried. I'll be honest with you, I'm not worried. Apple's strong. Apple's really strong here. And I still think that Apple, if you can ever catch Apple, again, not a financial advisor, if you can ever catch Apple under 130 or around 130, it's a fantastic 5 to 7 year long-term hold. I think this company will eventually make its way to $200 a share, $250 a share long-term down the road. If Tim Cook and his team are able to innovate properly. I was very disappointed with their last event. Very disappointed. Innovation is just fading from Apple. It's very, very sad. I think if Steve Jobs was alive at this point and the head of Apple, no disrespect to Tim Cook, I have a lot of respect and admiration for him, but I just feel like we need a lot of innovation. We need a lot of innovation here, and I think we're going to have a lot of cool stuff coming from Apple, but I just think Tim Cook's team needs to kind of take some risks, put their feet into the water and start swimming. Topher, we will talk about coin as well. I like coin. I still like coin, and we'll talk about coin as well. I think that's what you're asking. Oh no, he's saying the dude who coined HODL must be burning. He didn't copyright it. Oh, I guess yeah. Can you copyright it? I don't know. I guess honestly, the thing is, it's not like if they copy. Oh, there it is. You see that green candle coming in, Sam? That's people buying. That's people buying. I really hope you're not buying because I said it, because that was not legal or financial advice. But you see that's coming in. I don't know if you can actually legally. I guess you can. I mean, didn't LeBron try to copyright Taco Tuesday or something ridiculous like that? I guess you can. I know WeWork copyrighted the word "we," which is ridiculous. That company sucks. I'm sorry. We'll talk about that another day. All right. So Apple is doing good. We're recovering. We had a little small sell-off. People taking profits. I'm excited. I really, really like what's going on here into Apple long term, but I do really wish they would do a lot more innovation. Val is asking, is it too late to buy Apple? I don't think so. Again, always dollar cost average in, not a financial advisor again, not financial advice. Again, Apple is one of those you want to wait for a red day. Again, you never want to time the market but it's always good to wait for a red day. You'll always catch red days with companies like this, but it's always good to dollar cost average in case those red days don't come. So for example, if you want to buy $1,000 of Apple every week, every Monday, every Wednesday, every Friday, whenever you see Apple is red throughout that week, drop in your $100 and eventually the dollar cost average into a certain price point where you're at a comfortable average, and that'll keep you kind of unhindered, and you'll have dry powder across the board in case you see a bigger drop to be able to buy it for cheaper. Again, that's just my 2 cents. No, Topher, I'm not saying time the markets. I'm saying you could time the markets if you want. It's almost impossible to time the markets. I don't know anyone in history who's ever timed the markets correctly, because you see people saying, hey, there's going to be a market crash. They say this every single day. Eventually it'll happen one day, and they're like, oh, I told you. But don't time the markets. Dollar cost averaging, in my personal opinion. So I would buy in maybe a share a week, 2 shares a week, whatever your budget is. Dollar cost averaging weekly, monthly, yearly, what do I know? But however way you want to do it, dollar cost averaging is always proven systematically and kind of historically to produce better numbers and dates. Andre Jick did a really, really good video on this. He said, he brought in like an example of 3 people, and he said that, like, for example, person A buys at the bottoms across the stock market. Person B buys every single day and dollar cost averaging in, and person C just buys lump sum on one day and just holds throughout history. Person B is the one who did best, and person A did better than, and person A came in second, and then person C came in like the didn't do so great, because it's always good to dollar cost average in. You can probably catch that video. I'm not sure what these emojis mean. I'm a little bit 26, but I don't understand those emojis. BS before. Okay, so let's go to Facebook for one more second. Let's take a look at them after hours before we go to Qualcomm. Facebook after Facebook does not want. Look at these. If these candles are accurate, man, somebody really bought the dip. Facebook is not surrendering a single dollar. It could. Facebook could definitely go higher tomorrow. I think Facebook, if the hedge funds wake up tomorrow and say, all right, because I don't know if they're buying at these hours, but if people wake up tomorrow, I guess I'm buying them. I think Kathy Wood's going to be a little bit disappointed. She sold her Apple and sold her Facebook. Did Kathy Wood own Facebook? I'm pretty sure at a certain point she owned Facebook. I know she owned Apple, but they sold everything. But we'll see. I'm really disappointed that they own Netflix. Netflix, in my opinion, is 1,000% garbage. And on that note, let's go to Google's earnings real quick, and then we'll go to Qualcomm. Google came out yesterday. Google dominated. Google destroyed. Google is a powerhouse. YouTube, by the way, that we're all watching right now, that we're all live on, we have the pleasure of streaming for free to you all for free, is Google's product. It's like Netflix built into it. It has its own little Netflix in there. This is the power of Google stock. This is the power of YouTube. YouTube is the most decentralized, democratized platform in the world for anyone who wants to start streaming. Yes, they have the rules. Yes, there's some restrictions on there. Yes, there's some really stupid rules that, like, for example, you can't curse, you can't do this, or you lose your partnership. But yeah, Topher's on YouTube 24/7. I agree. I watch way more YouTube than I watch Netflix, Disney Plus, Hulu. I have all these subscriptions, but I spend more time on YouTube because it's better content. And then at a certain point, it starts becoming like a TV show. Like your Benzinga is one of the best stock networks you can have. You've got all these variety shows that you can interact with. You can't call CNBC and ask them a question, but you can talk to me directly via the chat. And I think that justifies a like smash right there. So smash the like button for those of you who are watching. But let's go into Google for a second. I want to take a look at their earnings. Google is an expensive stock, man. Google is almost $2,400 stock, which kind of scares a lot of retail investors away from it. Even though you can buy partial shares if you're using like Robinhood. I think Webull allows partial shares too. I'm in New York. It doesn't allow me partial shares. But I think on Robinhood, you can buy partial shares of Google if you wanted to. There's a lot of ETFs that have Google built into it, like VTI, VOO. They both have Google built into it, so you can get the benefits from them. Let's see if I'm lucky enough. There we go. There are those beautiful earnings from yesterday. So Google destroyed. EPS of 26.9 beat the 15.88. Great. Sales were up, fantastic, up $4 billion above the estimates. They approved a $50 billion Class C capital stock buyback. This Class ABC stock, I got to sit down one day and kind of figure that all out. I've never actually spent the time to figure that out all fully. I know it's like different stuff there, but I guess I'll have to spend some time there. Again, you're always learning in the stock market. That's the beautiful thing. Advertising sales, ladies and gentlemen, this is the bread and butter of Alphabet. Alphabet, I'm calling them Google. It's Alphabet, but I'm calling them Google. Up 44.68 bill from 33.763 bill year over year. That's huge. That's huge. Now, the thing is, with stay-at-home slowly curbing and people spending maybe less time on advertising, will this affect Apple? I don't think so. I think Apple is I'm sorry, Alphabet, Google. I'm getting my A's mixed up. I think Google is a company that's going to dominate and destroy in terms of advertising. They have all the data. We all use Google Chrome. I'm on Google Chrome right now. I'm not a sponsor, but I'm on Google Chrome right now, which all my data is being funneled through. So they have all the data, they can advertise accordingly, and they can run everything that they need to accordingly. So it's not a surprise that they have the best advertising, and they're making really, really good money from it. One thing I'd love to see one day is to sit down and I'll do this on my YouTube channel and do an analysis to see which one's better. Is it better to advertise on Google, or is it better to advertise on Instagram or Instagram? Facebook ads, I heard, are terrible now. Facebook ads are garbage. From what I've heard from comedians and people who use them to advertise, they just don't. The results aren't there. Jeff Warren says YouTube is almost too good because I'm thinking of canceling the YouTube TV because I barely watch TV right now. YouTube is fantastic. There's nothing on TV. That's the thing, is there's nothing. I mean, unless you want to watch like Grey's Anatomy or like any other shows out there. Suits is over. That's my favorite TV show of all time. But there's really nothing to watch on TV anymore. All the good shows are like on streaming platforms, and Google is fantastic. Google does not allow you to collect data from Chrome. Okay, that's fantastic. That's even better. I didn't know that. That's fantastic. I'm actually, as someone who hates getting his data used, I'd love to hear that. But again, they do have a plethora of data that they're getting from somewhere or some way. So yeah, there's something going on there. There's some form of data source somewhere that's occurring, but we'll have to see it. And maybe they're using Palantir. I doubt it, but that's just a fun way of bringing up Palantir, because we have a funny shtick of bringing them up every single stream. Alphabet revenue jumps 4% after revenue vaults, 34% operating income doubles. Wow. Again, revenue beat. Okay, so this is a repeat. So let's I'm not going to spend too much time on the chart. I will be going to Qualcomm really quickly, but I just want to see what the aftermath of, holy crap, they gapped up. Excuse my German, but these guys gapped up. That's fantastic. You know why that's fantastic? That gives me hope for like Facebook and Apple tomorrow, because someone asked me, hey, does Facebook and Apple have room to go tomorrow? So these guys dominated earnings. So that means that there's it gives you the ability to gap up, and tomorrow's going to be nice. I was worried, I'll be honest with you. I talked about it on the channel too. I was worried that if earnings come in really, really bad, especially for Apple and Facebook and Tesla, that we would have a cold month ahead of us in terms of SPY and stocks tanking again and reverting back. But this dominated. This showed the suits that, hey, we don't care. We don't care what happens. We don't care what's going on with all the crap going on. We're still able to deliver. We're still going to dominate. We're still going to destroy. And I'm really, really, really excited about the future of both of these companies. And Google gapping up like this is fantastic, and it gives me a sign of confidence. And we're gonna have to see how the final big boys tomorrow report, Twitter and Amazon. I'm not sure if we're live tomorrow, but we'll cover that the next time we're here. We'll have a lot of fun doing that. So let me go to Qualcomm real quick. I mean, if there's any questions about Google later down, we can jump into it. Same thing with Apple. Mario, what's up with Apple? Apple just did a really good earnings report. They did very, very well, and the stock is doing well. It's calmed down a little bit, but we're expecting it to continue its rally, hopefully into tomorrow. But again, not a financial advisor. Qualcomm, my favorite player in the 5G tech space is Qualcomm. I first heard about these folks when I bought my Samsung Galaxy S3 many, many moons ago, back when I was in high school. I'm 26 now, for those of you who want reference. Many, many moons ago in high school, it was my very first smartphone. I was someone who was always late to the cell phone game. My parents were not huge fans of cell phones. Yeah, I come from that old school background, but then I ended up going and studying computer engineering. That's where I got my bachelor's in computer engineering, and then I got my master's in management technology. So my background jumped into tech. I guess them holding me back from it kind of rubber banded me into technology and all this stuff. So Qualcomm is a 5G chip producer. That's one of the aspects that they do. I want to show you their website because it's actually one of the coolest websites out. A really, really aesthetically pleasing website. Not a cool website. There's not like fancy schmancy stuff going on. But I want to take you to the Qualcomm website real quick. So you've probably seen this before, the Snapdragon logo. You've probably seen this if you're a Samsung user, especially. Their big thing is, here you go, the Qualcomm Snapdragon 888, which 888, it's actually a very lucky number. 5G chip, which is big in the 5G phones. They work with Apple. I believe Apple is one of their customers. I can show you the actual phones that their product suite. They're in 5G, AI, Bluetooth, modern RF systems, processors, and Wi-Fi. They're actually working on Wi-Fi 6, I believe it's called. We can actually go here. They're doing a lot of fantastic tech here, which always blows me away. Internet of Things. Internet of Things, by the way, for those of you who may or may not know, it's the connection of all your devices. So, for example, making a smart house where your smoke detector talks to your Alexa and all that stuff. That's the Internet of Things network. And they've got all these chips. Naresh is asking if I have time for Mara. I'll try to squeeze Mara in, but if you go to my YouTube channel, I did an extensive video on Mara. Just go to ryanstocks.com. The very first tile is my YouTube channel. I did a really, really extensive video on Mara last night with some really, really cool news. So I'll push you there, but if I have time, I promise I'll try to sneak it in. Excuse me. All right, so we got the overview, the products. I'm looking for that word, that Wi-Fi 6, I believe it was called, but that's okay. So they've got I'm trying to see if I can pull up a customer list. Investor relations, it should be here. Again, the earnings are here. They're fantastic, but I want to compare them. I want to show them to you on Benzinga because it shows me the beats and the estimates and all that stuff. Let's go to the investor kit. No, it's not this. Okay. Contact sales. We should call them up live right now. Hey, Is it? That's interesting. Kadir Ka, excuse me, is saying USA's iPhone, Europe is Android. I've never been to Europe. That's interesting. I didn't know that. I didn't know that. I know iPhone dominates in the Asian markets and in the US markets. I've never looked at Europe's data, or the European data. That's really, 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 really interesting. Let me just do a Google. Let me do a quick Google search. Qualcomm customers. Qualcomm Inc. Customers by division and industry. There we go. There it is. So we got there's a ton of websites that can give you a lot of this information and stuff. There we go. Apple is a customer. Okay, I just wanted to confirm that. I know Apple's a customer, Alphabet's a customer, Google. So there you go. Google, one of our friends. Hey MD, how you doing? Microsoft a customer, T-Mobile, Sprint, T-Mobile again, Time Warner, Workhorse. I guess I don't know why Workhorse is here, but okay. So it looks like they're a customer. We've got a ton of customers here. I'll put the link for you folks in the chat if anyone wants to go and look at all their customers. I put that in the chat for you folks so you can take a look there. So let's take a look at Qualcomm's earnings. We've held off for long enough. Let's jump in. Q2 adjusted earnings estimated. Their EPS is 190, which beats their 167 estimates, which is fantastic. Their sales were 7.90, which beat the 7.62 estimate, which is another huge, big beat, which is cool. Again, you might be saying, well, why didn't they beat by 8, 9, 10, 15 billion? Well, you also have to take into account that here's a huge semiconductor chip shortage, which is affecting everyone. Qualcomm last earnings took a massive hit because of this. And again, if you think about Ford, we were talking about Ford earlier, Qualcomm was transparent about this, and it's reflecting positively in this earnings. They didn't come in with massive guidance saying, hey, we're going to go to the moon. And Ford is doing the same thing. They're saying, hey, we're going to have some troubles in the coming weeks to months. So you're seeing a drop in the stock, but I think it will recover as we go into the next quarter for Ford. And I think that's, again, if you look at Qualcomm and parallel that, again, two very different companies, but again, dealing with the same issue of a chip shortage. It's happening parallel here. So they're seeing their Q3, they're adjusting it from 0.155 to 0.175. That's their estimates versus the 152 estimates. So they're raising guidance for Q3, and they're raising their sales estimates to 7.1 to 7.9 bill, and the estimate's 7.11 bill. So that's good. That's the increasing guidance, which is always good. We see that reflected into the stock prices and charts. So let me take you to the 1 minute chart. Let's go. Let's see what's going on into our after hours. What the heck is this? I got a random line there. Right. What? Okay. All right. I got a weird candle that's throwing everything off. All right. This is weird. Let me pull up Weeble. QCOM. I hope I don't get fired for this. But okay. So we're getting a little bit. That candle there was giving me a little bit of issues. TradeView, I guess, is bugging out. These guys are bugging out too. Everyone's bugging out with Qualcomm. What the heck is going on? Let me turn off Bollinger Bands. Turn off Bollinger Bands. Okay, so it jumped up and it has not given up a single dollar. So I guess we can go back to Benzinga. It's jumped up and it has not given up a single dollar in after hours, which is fantastic. Let me go even bigger. You see this, folks? It jumped up. It went. No, Mara did not report earnings yet. Mara's earnings are due in May 15th or May 12th to 15th, around that time are when Mara's earnings are due. We're talking about Qualcomm right now. So they gapped up, did fantastic, and they're holding. They're holding very, very well. I'm excited for this company. I'm really, really excited for this company. Let's go into the daily chart and let's kind of do a quick analysis on the daily chart to see how everything will be moving on the daily chart. So as you see here, this was probably, I want to say, this was not around last earnings. Last earnings was, we can actually go to financials and see what their last earnings were. Calendar earnings. You see, this is all the cool tools you have within the Benzinga Pro thing. I could have, it saved me a huge Google. So last earnings were 2.3. So if we go to the chart, that gap down, my instincts were correct. Right here. You see this? Big gap down. The 2.3 they reported, huge gap down the following day because they said, hey, chip shortage, man. What are we going to do? We can't deliver. We're not going to be able to deliver what we need. Let me just unhollow out these candles. So let's take a look here. So I imagine tomorrow we're going to open gap up. We're going to open and we're going to gap up tomorrow. That's my estimate on this. With everything going on here, I think the street's going to be ready for it. MACD was ready to kind of reverse anyway, which is a fantastic sign. RSI is strong. RSI is bullish as heck. Here, look at this. Straight up. Straight up. Rocket ship, rocket emoji, Dogecoin, whatever you want to say. Get the algorithms going. smash the like button. 200 moving average was support. We closed above the 50 moving average for 3 consecutive days, which is great. And now we closed 2 consecutive days above the 21 moving average, which is fantastic. So I'm looking forward to seeing how this plays out. Their conference call is in progress. We can't listen to it now, which is completely fine. We don't need it. We just covered everything. But yeah, Q&A time. Let's if you have any questions about Qualcomm, we covered most of the earnings that came in. Tesla, we can cover Tesla's earnings here if you guys want. Let me know in the chat. We can do Tesla's earnings. I know they were on Monday and they're probably old news now, but we can cover that. I'll give you guys a second because there's a bit of a delay between when I say something and you see it. So I'll give you a second to let me know what you guys think, and then I'll take a little breather because I've been talking straight for a minute. So, okay. All right, so no one's asking for Tesla, but that's completely fine. We don't need it. We don't need your Tesla. Good riddance. All right. I want to talk about THCB for a second. Uh-oh. Did Jack Dorsey sell shares in Square? Jack, don't do this to me, man. Jack, we need you. No, you. Dang it. Oh, no. Okay. All right, so Jack Dorsey sold quite a few amount of shares of his common A series stock within this. SPAC broker says we've already been over Tesla. Okay, no worries. No worries at all. Mash is asking for Baidu and BNGO reports, please. Okay, so did BNGO report earnings? BNGO, I thought that was a bit ago. Calendar after market close. BNGO did earnings on last month. There's no earnings, but we can take a look at the chart. I know they had a fantastic day, then they surrendered all the gains right afterwards the following day. So they had a really good day on the 26th, 2 days ago. Yeah, 2 days ago. Big, massive run of 23%, which is fantastic. No worries, Mash. No worries, man. And then they surrendered 7% of that, which is fine. You're still net positive. And then today they had essentially a flat doji day, which is okay. It's okay. You can't go straight up. You can't have 23% days every single day. It will destroy your stock. It's not good. It's not healthy for any stock to move that way without news, without anything going on. Now, BNGO had news, which was good. That's why it was moving. So I'm seeing this trajectory being formed here. Let me run a fib for you. Give me the extension. So let's run a quick little freehand Fibonacci extension here. So it looks like it went to around the 68% level, and then it's coming back down and consolidating around the 50% level, a little bit under the 50% to the 23, to 38, then to the 20. So we might come down and see the around like the $6 area and then bounce back up based off of this, but again, not confirmed. We need more data points, which is more days in the market to see how this plays out. MACD is good, but MACD is curling a little bit. If we zoom in, you'll see that arc being formed slowly here, which worries me a bit, and RSI's flat. But again, these guys are a company, in my opinion, that's more of a 1 to 3 year long-term hold, which might be able to return back to where they are. I have a position in them, full transparency. But I'm excited. I like the future of this stock. Their tech is just fantastic. I don't know what ARK-G is doing, not investing into this company and investing in some weird companies sometimes, which then they eventually sell off. This is one of the few companies who has the technology to identify variations in the coronavirus. We can't say it on here. We get demonetized. So let's go to Baidu. Baidu is an interesting company too. I don't know much about them. I want to refresh myself. Okay, so Baidu is essentially the Google search engine of China. Now I remember it. A lot of international students at NYU would use this, which was interesting. They would still come here and they'd still use it, which is cool. I guess it worked for what it needed to do. Qualcomm since last earnings, bag holder at 146. Kadir Kai, you might be free of your bag tomorrow into after hours today and tomorrow. It's at 144 last I checked. Real quick, just for him, I will jump back. So yeah, 144. You're doing good. I think you're going to be fine. I think you're going to be pleasantly surprised tomorrow morning. Okay, so Baidu's been flat for a long time, man. Baidu's been flat. RSI is technically positive. I'm sorry, MACD is technically positive, but it has not had any substantial volume to justify a movement with a stock of this float. I believe they're in the billions. All right, so it's not giving me the float there. Let me see if Webull will give me the float. Baidu float. Baidu, okay. Free float. Okay, so it's not a low float stock, so it could still move. All right, not a problem. It's been flat. It needs volume. It really needs volume. If you look here, the days that it moves up, like here, it had a 1% day on 121 million volume, and then the volume's down to the single digits here, so it's struggling a bit. When are their earnings? Okay, so earnings are all the way in May, which is again technically not that far away in the grand scheme of things. Any news? I don't know, man. I'll be 100% honest with you. I'm not crazy about Baidu. Auto callable invest. They did a note raise round from what I'm seeing here. To adventure smart car. I don't doesn't make sense to me. People underestimate the amount of effort and time it takes to launch turn your company into an auto manufacturing company. Elon Musk spoke about it on the investor call as how difficult of a time they had doing it. And these were like some of the best engineers in the world. It almost bankrupted Tesla. Like we could have been here today and there'd be no Tesla at all. And they were at Apple's door begging for a buyout, and Apple said no, and Google almost bought them, and then finally something happened, and they were able to keep going independently. So Tesla could have been under the Google umbrella. Imagine what the share price would have been. Then this would be like a $10,000 stock. It would be like in Berkshire Hathaway territory if Google had bought Tesla back then. But Baidu, my friend, I don't know. I'm not crazy about it. It's been flat for too long. There's no volume. There's no catalysts. I'm not crazy about them as a company overall because it's such a niche area. I'm not a fan. I'm not a fan of this stock. I'm not a fan of this chart. I am a fan that I was able to respect and keep the 200 moving average and bounce like perfectly. But other than that, not a fan. Not a fan at all. All right, let's go somewhere else. Elliot says, is there any concern as to why ARK hasn't invested into BNG already? I'm bullish and have a heavy position. So Elliot, no, there's no concern. There's so many companies out there that ARK sees across the board, across all their funds, that sometimes you just can't fit them in perfectly. Like, for example, in my opinion, 23andMe is a company with so many data points, so much information, a plethora and a wealth of information, and this so much great tech, but ARK just wrote them off. They said, hey, their tech doesn't match what we want. And meanwhile, I'm looking at the ARK-G fund, and some of the companies in there I'm not crazy about. I've done deep dives on some of these companies. I'm not wild about them. I own ARK-G shares because I don't know much about the genomics space. But once you start comparing all these different companies, not a huge fan of ARK-G's holdings right now. I think BNG will be fine on its own. Yeah, Dreamwalker. Yep, you're correct. VGAC is the SPAC for 23andMe. That's correct. I can show it to you here. I do own a position in VGAC, full transparency. Again, I'm fully transparent with you all. If we talk about a stock, if I own it, I will let you know. Unfortunately, VGAC I don't know. I don't think they are. I think at $10 a share, they're perfectly valued. I think right there in the middle, perfectly valued. I think that people are underestimating the amount of data they have and what they can do with that data, with the customized medications and everything they have. It's not just 23andMe is not just a who's my long lost cousin company. They're actually becoming a biopharma company with a lot of data, which data is value in these areas. It's like a social media company with people's information. Bio companies have this, and VGAC has a plethora. I did a huge DD video on my YouTube channel. Again, ryanstocks.com. You can see it's the first tile. If you go there and you can watch it, I did a huge deep dive into VGAC. I really, really, really like the company. And that's why I opened a position. I'm bag holding, technically. I hate that terminology. Never call yourself a bag holder. It's such a negative psychological effect on you to do this. Especially if you're a long-term investor. Like, for example, Kadir was asking about Qualcomm. If you got into Qualcomm and you did your due diligence and you said, all right, I'm going to hold for 3 to 5 years, a little baggish area shouldn't psychologically bother you. That's where, like, if you're trading the stock, that's where you should have a stop loss built into it. 7%, 10%, 15%, under your entry price, wherever your risk tolerance is, in order to be able to protect you on your trade and protect you from becoming a bag holder. But in my opinion, I don't see myself as a bag holder in VGAC. I see myself jumping, having nice potential. So you're saying, it says that they value me at 6 bill. I think you're, I think, 23andMe. Okay, they value 23andMe at 6 billion. I am in the genetics field. Okay, so that's cool. Okay, that's interesting. So you're actually in the field. So they're valuing it at 6 billion. We'll see. Let's see. We haven't heard anything from them in a while. I respect your opinion 100%. Again, I'm not in the genetics field, so I don't know. But to me, it just seemed really, really interesting that they had all this information ready to go at the disposal. Tony says Hodler is the best. Market cap for VGAC is, market cap for VGAC is low. Market cap is low, but again, we are still in the SPAC. Where is market cap? Okay, it's not showing up. Okay, no problem. Market cap is low. VGAC only had 11% of 23andMe. Okay. We'll see. Let's see how it plays. I'm really interested to see it. Dreamwalker, hit me up on Twitter at Ryan Rozbiani. I'd love to have a conversation with you about VGAC, especially if especially that you're in the space. All right, enough about VGAC. Smash the like button if you haven't already. Definitely smash the like button. Richard is asking about ChargePoint. Yes, how the heck did we not talk about ChargePoint? ChargePoint, GE, and Blink have now gone into an agreement, and it's going to be massive. Let's take a look at the agreement. We've been telling you folks. We've been telling you folks about these charger stocks for how long now? I think I can swear to you from the very first episode we did on this network, I've been talking about charging stocks to you guys, and this is exciting news. I'm happy. I'm very happy. Here it is. What happened? GM announced the launch of the Ultimum Charge 360, the new platform which will integrate with charging networks on vehicle and mobile apps and other products. Cool. Partners are Blink, ChargePoint, EV Connect, Flow, Green Slots, SemiConnect, EV Go, which is going public via SPAC, with Climate Change Crisis Real Impact, which is CCLI. EV Go and GM launched their first Ultima ready fast charging station with the goal of 500 fast charging stations live by the end of 2021, which is good. And we're going to see that coming. I got Money Mitch taking over. Where are we? Mitch, we're overtime.
Looks like you're talking SPACs, man. I had to jump on, even though I'm Money Mitch. I'm still SPACs attack, baby.
Money Mitch, what are you doing? Money Mitch, I need you to get me one of those nice fancy suits you get to wear. I'm sitting here in a t-shirt. I need one of your fancy suits.
Hey, we're gonna get you on, my friend. We're gonna get you on. But one thing I definitely would say about ChargePoint is pay attention today, right? We got Biden talking at 8:30. He's gonna mention some stuff about infrastructure. I would be paying attention, definitely, guys. And just to let you guys know, we're actually going to be streaming that on Benzinga, so you don't got to go anywhere. You can watch Benzinga, and you guys can check them out.
So subscribe. We've told you 1,000 times, subscribe.
Up next, if you don't know, Ryan always talks about them. I've heard him talk about them. NFTs, guess what? I'm going to be talking about how I just did a 1,500% gainer in my first NFTs, and this was only a $15 investment, guys. Only a $15 investment, and I've already made over $200 back. So come check out Money Mitch. We're going to be talking about that. We're going to be going over some MindMed. MindMed, anybody? Any fans out there? Come on in. Cannabis. I mean, I live in Colorado, guys. Come check it out, guys.
Don't you're giving away all the goods. Hold on, let them come and watch the show. You're giving them everything.
Oh, those are the industries. If you want the stocks, you got to come on in, baby.
Click the link. What are you switching over? You're gonna be on this feed, right?
I'm gonna go switch over right now. You go ahead and wrap up. Let them know where to find you, folks, Ryan, and wrap it up.
You got it, folks. Thank you so much for watching the stream. Again, as always, it's a pleasure. If you want to catch me, you can go to ryanstocks.com. All my info and links are there. Follow me there, and please go check out Money Mitch's show. He's fantastic. Thank you so much for watching, everyone. Have a great day. Bye-bye.